BigBear.AI stock shot up to over $10 this year and then crashed nearly 30% in the last month, back down to $4.98. But it's still up almost 270% year over year. So the question is simple. Is this just another AI hype cycle, or is Big Bear actually building a billion-dollar business? Here's the problem. On one hand, Big Bear isn't just a maybe someday AI play. They own TrueFace, a facial recognition system that can match you in under 2 milliseconds. They're already running Veriscan in airports, moving thousands of passengers an hour. And the US Department of Defense, the NSA, and the Air Force are all signing contracts with them. But here's the problem. Q2 revenue fell 18% to $32.5 million. And losses, they exploded by 1,400% to nearly $229 million. That's not just a dip, that's a crater. And yet, the market is still pricing Big Bear at a price to sales of 11.5. And that means investors today are paying $11.55 for every $1 in sales. That's double C3 and way above defense contractors like KBR. So here's what I'm watching the most, right? It's a thing that I think most people are missing. Big Bear's NFL partnership. Their name is now on the Washington Commanders training facility. And that's not just marketing, it's a signal that they're trying to break into the mainstream and expand their market. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. In this video, I'm going to break down Big Bear's contracts, growth potentials, the risks around defense revenue, and whether this stock is a sleeper tech giant or just another overhyped AI play. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That's a good thing because I'm not here to sell you hype. I'm here to cut through the noise, look at the numbers, and help retail investors like you make smarter, more confident decisions. So, with that out of the way, is Big Bear the next Palantir or a ticking time bomb? Let's get into it. BigBear.AI Holdings is a decision intelligence solution provider for various industries like defense, intelligence, manufacturing, and infrastructure security. And here's why it matters. They're not just building another app, they're building the brain that could power the next generation of mission-critical operations. It's known for TrueFace, a facial recognition system. This technology delivers a real-time and accurate one-to-one or one-to-many match against a designated gallery, all completed in as fast as 2 milliseconds. Think about that. 2 milliseconds is faster than a blink of an eye. And if this tech scales, it could completely change how governments and corporations think about security. And that's not all. Let's raise the stakes a little bit, right? Aside from TrueFace, Big Bear's Veriscan facial recognition solution is tailored specifically to streamline traveler authentication across different airport environments. It uses state-of-the-art computer vision technology that delivers fast, accurate, and secure identity verification. Think about it. Airports need to move thousands of people an hour. Every second saved is money, safety, and trust. And if Big Bear can own that space, well, we're not just talking about contracts, we're talking about becoming a global standard for travel security. Aside from its commercial use, Big Bear has been awarded several contracts from major organizations like the Department of Defense, the National Security Agency, and the US Air Force. This highlights the power and demand for Big Bear's technology. Translation: when the government is cutting the checks, it's no longer a science project, right? It's real adoption. So you could say this isn't just another idea stock. Big Bear is already embedded in systems that governments and airports depend on. Now, let's talk numbers, right? Because this is where things start to get a little messy. After a massive bull run that pushed the stock above $8, Big Bear is now trading back around $4.98. That's a 29% drop in just the last month. However, the stock is still up 269% for the year. So, if you've been holding for the past 52 weeks, congratulations, you're still in the green. And that tells you something important. Momentum is real, but it cuts both ways. In terms of valuation, Big Bear is trading at a price-to-sales ratio of 11.55. That means for every dollar in revenue that the company generates, investors are currently paying $11.55 per share. An 11.55 PS ratio is on the higher end of its peer group, which means the market is already pricing in big future growth. Its competitors, C3, KBR, and Mobilicom, they trade at 5.34, 0.81, and 13.43 respectively. Of course, Palantir's price to sales is off the charts because its growth rate is also off the charts and it's also making a ton of money. So the question is Big Bear really the next Palantir, or is Wall Street getting ahead of itself? Because I think you could say that Big Bear trades at a valuation that assumes massive future growth. And is this even possible? Well, this is where things really start to ramp up. And for that, we need to dig into the financials. For its second quarter 2025, Big Bear reported $32.5 million in revenue, down 18% from last year's $39.8 million. According to management, this was because of a reduced volume on certain Army programs. Meanwhile, net losses, they surged to $228.6 million, up 1,484%. This loss reflects ongoing operational and financial challenges that Big Bear has to address if it's going to stop investors from bailing. Meanwhile, Big Bear's revenue guidance for the year is going to be between 125 and 140 million. Now, yes, it's common for pre-revenue or early-stage companies like Big Bear to fund their operations through debt or equity financing, and so far, that's exactly what they've been doing. On that note, management believes its operating cash flow will be enough to fund the company through the next 12 months. So, they're not out of cash yet, but I would say the clock is ticking. But investors, well, they want to know, what could actually push this stock higher? Well, on August 20th, Big Bear announced a multi-year partnership with the NFL's Washington Commanders, and it grabbed immediate market attention. The deal includes renaming the team's training facility as the BigBear.AI Performance Center, plus branding across stadium suites, practice jerseys, and other key assets. For a company that's usually been behind the scenes, this NFL deal, I think, signals a bold strategy to raise its national recognition. In other words, Big Bear just went from defense contracts to NFL stadium billboards, and that could open the door to consumer awareness. Not only that, Big Bear also announced the launch of a next-generation cargo security solution in partnership with the International Shipping Compliance. This project is starting in Panama, a global trade hub with plans for regional and worldwide expansion. The AI-driven platform integrates biometric verification, real-time monitoring, and centralized oversight to ensure accountability from origin to destination. The system is designed to strengthen supply chain, add transparency, as well as disrupt smuggling networks. So yes, Big Bear has some very interesting deals in the pipeline. And if they pull it off, this company could move a lot closer to profitability. And that's when the story changes, right? From emerging tech to a potential tech powerhouse. But before you rush to hit that buy button, there is a reality check that we all need to know about. The biggest issue with Big Bear, of course, are the numbers. Both revenue and profits, are sliding. Sure, there are projects lined up, and management, well, they still expect between 125 and 140 million in revenue this year. But that's not a guarantee, and revenue doesn't automatically mean profit. Unless we see hard evidence of a turnaround, we have to assume that Big Bear may continue to trend downward. And then we have a red flag that I think most people have overlooked. In Big Bear's second quarter filing, management mentioned uncertainty in certain Army programs. What does that mean? Because that's a problem to me. Big Bear relies heavily on government contracts. Any cuts, cancellations, or delays directly hit their revenue. And no surprise, they even pulled back on their EBITDA guidance for the year. That tells me the company knows turbulence is far from over. So where does Wall Street stand on Big Bear? Well, analysts still call this stock a moderate buy. Price target still sits at $8, which suggests as much as 60% upside from today's levels. From a technical perspective, Big Bear stock is trending downwards and nearing oversold levels on the 14-day RSI. It's also sitting right above a short-term support line at $4.08. Looking at the chart, you can see the recent sell-off left a big gap between $6.80 and $6.20, and that zone now is a key resistance level. From an investor standpoint, Big Bear is high risk, high reward. If you believe in their long-term vision, maybe take a position with a small slice of your risk capital. But for me, until I see real cash hitting the bottom lines, I'm staying on the sidelines. Because here's the truth. Hype can make you rich or it can burn you. And the market doesn't care. But what about you? Are you buying into Big Bear's growth story or are you waiting it out? Let me know your thoughts in the comments below. And while you're there, if you found this video helpful, do hit those like and subscribe buttons so others will find it as well. Well, folks, that's it for me today. I want to thank you so much for watching, and I'll see you next time.